Harshvardhan, hi. Thank you so much for making time and speaking with us. What's your take? Is it just a temporary setback and the move on Mahanagar IGL, etc., is a bit exaggerated today? Or do you think it's warranted?
So, this clearly seems to be a sort of a knee-jerk reaction, and definitely right so, mainly because it was anticipated that the gas prices will be reset at a much lower level, i.e., close to $6 to $6.5 per MMPTU, which would have helped these companies to not only make CNG much more attractive, but also protect their margins in the first and the second quarter. With the anticipated price cuts not happening, certainly there is some anxiety amongst the investors whether there is a U-turn that has been thought by the government, or there is possible change in guard or something else. And to that extent, there is some uncertainty which has lingered now in the minds of investors, which is clearly reflected in the stock prices, the way they have sort of reacted. I have no doubt in my opinion that eventually the implementation of Kirit Parikh committee recommendations hold key for the sector to do well.
Right. Right, that's of course Harshvardhan. Harshvardhan, when we just talk about what's happening with power stocks, how things are moving in, can you just talk to us about 2, 3 key events to watch out for? What's happening with coal prices? What's happening, or what to track in terms of production numbers? What are the 2, 3 things to watch out for going into April and May?
I think power, 2 or 3 things to monitor are going to be what is the capacity addition in terms of.
Go ahead.
Sorry, relative to the demand, what is the capacity addition, particularly on the coal side, where only a handful of projects are under execution, and which clearly is a risk from an energy security perspective. Second point is we have seen for last several years, Coal India has not increased the FSA prices, and that is actually a key, trigger for, or rather key milestone to watch out for, whether at a time when the demand is fairly strong, the government goes ahead and resets the FSA prices. If the FSA prices are reset, definitely while Coal India benefits, there will be additional strain on the pockets of consumers. And I'm not sure when the state elections are around the corner, how this particular math is going to work out. So 2 key things to monitor. One is the incremental demand and the capacity addition. And on the other side, the coal supplies. The third point that I will actually monitor is, on the renewable installations, where the government has put in a lot of efforts, whether at least in FY24, the renewable installations kind of, improve. You've seen a notification from ministry today that ministry has asked several, agencies to invite bids for at least 50 gigawatt of renewable projects per year. Now that's something that's really enormous bidding, if at all it happens, and that's the third most important factor that I'm going to watch out for.
Harsh, just coming back to the oil and gas space, and my question to you is, as and when those recommendations do get accepted, do you expect a bit of knee-jerk reaction on the upside as well? What's the, let's say, fair value, and at what levels will that get priced into the stock, you believe?
See, CGD stocks in general are quite cheap relative to their business models, which are sort of, non-dilutive in nature and seem to throw secular growth stories. I would think that maybe 5-7% correction in IGL will actually imply that on FY24 basis, the stock will trade at something like 16-17 times if you ignore the value of holdings in the various joint venture entities. Now, relative to decadal PE multiples of IGL, this is a relatively a value buy. But bear in mind, when you're buying into these utilities, gas utilities, one should not expect a 20-25% returns incrementally. The returns will mirror more or less the earnings growth, and the earnings are going to be more driven by volumes, which are going to be in the region of 10 to 12%. So these stocks will throw you anywhere between 12 to 15% compounding over the next few years, primarily led by volumes, which is not bad given what the overall risk framework is.
Realistic expectation of 12 to 15% and not like a 25% kind of number, because growth is going to be volume led. But just before we let you go, Harsh, since we have you with us, what's your take on Reliance? Because suddenly that's the big mover, which was at least showing quite a bit of momentum on Friday as well. Any thoughts on how Geo Financial Services unlocking is going to play out? What's your stance on the stock?
See, at current market price, the risk reward seems to be quite favorable, and that's mainly because of two things. One is, if you net out the value of O2C business, the telecom, ENP, and ascribe no value to the green energy business, then at the current EV, the stock seems to be pricing in valuation of retail, which is at par with when they raise money from strategic investors. The business has grown multifolds since the money was raised in retail, and to that extent, the inadequate disclosures, deferment in tariff hikes in Geo more or less seem to be priced in at the current market price, and we are incrementally getting more constructive. I think what will make us most constructive is some traces of tariff hike in essentially in the Geo or the telecom business, which will mean that incrementally the return ratios start to improve here on.
We let you go on that note. Thank you so much for joining us with that quick take as to what's happening in the oil and gas space, Reliance, as well as a bit of a insight into the power sector as well. But for now, the market is holding up in the sense that we are not losing steam